Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick on the show today. We'll just talk about every piece of news because there isn't much happening on this Thanksgiving Eve. We got some earnings. Deere, a monster. Square, a monster. HPE, Meg Whitman is leaving, so we'll talk a little bit about that and then take your questions from our chat at premarket.benzinga.com and then on our YouTube channel as well. Our guest today, Dave Winky, editor at Keystone Charts. He's also a technical analyst and break down some charts for us there. Joel, how's it going this morning in the markets?
We're in the green here, only a few ticks off the all-time high that was made yesterday at 0050. We will keep an eye on that, air above that. Pre-market low, 94.50. What that was, the former all-time high. So we'll keep an eye on that for any continued downside activity. Crude in the green by over $1 here. We got to talk about crude. We've hit 58.05 in today's session, 58.11. That's a high of the move. A little bit lower supplies here. So we will talk about that when Dennis comes on. Gold in the green by $2.40 at $12.84.10. Silver under $17, just flat at $16.96. And Bitcoin still above 8,000, currently trading at 8,279.92. Dennis, how you doing on this Wednesday morning?
Pretty good. Getting ready for American turkey.
You guys can't do a turkey over there.
I'm not allowed?
No, you're
just
not.
Because I don't get two Thanksgivings. I thought I get two Thanksgivings.
Everyone in the chat, who thinks Dennis should do a show tomorrow from 8 to 9 because they don't work in Canada on Thanksgiving?
Yeah, well, I take, I thought I'm entitled to two. I thought I get Thanksgiving, Canadian Thanksgiving, and U.S. Thanksgiving. Two turkeys.
I think Dennis should just spend the hour live streaming himself kicking his computer.
All right.
I hate my computer.
We should just.
This Windows 10 is like the worst thing ever. And, I don't understand why Microsoft's at all-time highs because I'll tell you, I have so many issues with Windows. Like, first of all, it's asking me to update like crazy all the time. It wants to update every day. And it wants to restart in ridiculous hours. I've complained about that before. But, okay, so I give it a chance to restart at like 5 in the morning. I tell it to restart. So the computer restarts, but it doesn't do the updates. And then it says, and then I get a pop-up message from Windows 10, lovely, and says, we were going to update your computer at your scheduled time, but your computer wasn't on. Yeah, you shut it off. You shut my computer off to do the updates, and you just forgot to do it. It's completely messed up. And then Skype itself is just messed up, too. Ever since I did this new update on Windows 10, now my Skype doesn't work right either. So I don't know. Windows just is a mess. And I can't understand for the life of me why Microsoft's all-time highs. Maybe just because everything is going up. Maybe they have other products as well. But I tell you, they don't know what the hell they're doing on Windows.
All right.
Fuzzy says he has the same issues. Joe's laughing in the chat. It's true, man. This Windows 10 absolutely sucks. That's the bottom line. It sucks. And I don't know where you can go, what you can do different. Maybe you just got to go to Apple products. I don't know. But anyways, the stock market doesn't care. Microsoft's right near all-time highs. They think it's awesome. Stock market does anyways. I'll tell you, it stinks.
All right. Let's just get down to some crude oil here, Dennis. And Spinner makes...
Joel quickly changes the subject. He doesn't want to get sued by Microsoft.
No, we won't get sued by... I mean, Microsoft, if you want to short it, Dennis, I mean, we talk about price reaction.
I want to put a hate short on it right now, but I'm too scared to short anything in this market. How do you short anything? Everything just goes up. How do you short? Okay, unless you're shorting like maybe some retailers or maybe, there's a few General Electric. How do you really short anything? It all just goes up. There's like a select few stocks that don't. But look at the market yesterday, Joel. I mean, what really looks bearish on the charts? Find me, besides General Electric, find me something that, looks bearish. Like of the major stocks, I'm not talking some Mickey Mouse smaller issues. I mean, go through it. We haven't done this for a long time. Why don't you look at some of those major S&P components? Look at the charts. So let's do the top 10. Can we do it?
Yep, sure. Well.
Okay, what are they? Start from the top.
Apple.
Yeah, Apple.
Apple.
Well, that doesn't look bearish.
No, but if you want to try and make a bearish case, 8-point move, 50%, you've taken that back, right? 6, 8, 4, 172. You can get bearish if it doesn't hold 172. If you want me to make
it, but it always seems to hold. I mean, we could have said this a million times, and the things just keep coming back. I've like thrown in the towel on ever being short again.
Google. I mean,
this must be the top. Google's just a monster. What did it make? Like go up like another $16? I say I own both these in my investment portfolio too.
Well, if it can't get through that triple top here that you have,
but you know, it probably will.
Okay,
you gonna bet against it? I'm not betting against. I own it.
We'll skip Microsoft and Facebook.
Great on the charts. Horrible software they produce in Windows 10, but looks great on the charts.
Facebook, all-time high 182.90. You can't make a bearish argument there. Amazon. Oh, you got sellers at 1140, but it's trading at 1143.30.
1200 by the end of the year.
Yeah. Let's see. Someone actually asked me they had
That's 5 for 5. They all look good. Continue.
Johnson. Let's see what's going on.
Let's pull back a little bit off the highs. But full disclosure, I have an overnight short on it. That's just a hedge, but yeah, it still looks pretty good too. That 138 holds. You got a 50%. You can argue like the 130 up to the 144. You're almost back at the 50%, finding some support. I mean, hard to hate on J&J. It's been pretty good too.
Mr. Buffett's company. You can't short that ever. Brick B.
I can't short Warren.
Yeah, 180. That's come down. Looks like it found some support. And let's go to the oils here and ExxonMobil. Let's skip this one and then we'll just look at.
We talked ExxonMobil yesterday, so I like it at 80. I actually bought some more energy stocks in my investment portfolio yesterday, so I like oil.
Okay, back to Spinner's comment. Oil has moved from 49 to 58, but the oil stocks really haven't moved yet. Dennis, you
some haven't, some have. So you got to select, pick your poison. You're right though. You know what? And that's why I was picking up some energy, stocks themselves yesterday in the form of an ETF, but in my investment portfolio, and the exact same argument. The oil stocks are lagging a little bit here. I mean, you can look at Halliburton, look at the HAL chart. That 41, that's a nice spot. Schlumberger has not gone anywhere. So these are underperforming. You're right. But, you wonder if it doesn't play catch up eventually here. I mean, this SLB, if you go back out to the monthlies, it's like a 6-year support level here for it at $60. And oil's on a little bit of the comeback trails. I mean, it doesn't look, if that support can hold, I mean, you kind of, got your wrist defined a little bit.
All right, JP Morgan knocking on the
door.
They're
all over the place. Holy cow, I got to lead this. We're talking oil. We're talking S&P. Where are you going, Joel?
Well, you wanted to go through the rest of the components.
Oh, you're back to the S&P components. Okay, back to the S&P component. He just went on a tangent for oil. What's JP Morgan?
JP Morgan, just off the all-time high, 102.42.
Banks look good, too.
Banks look good, too. Is that when Bitcoin puts them out of business?
Yeah, when Bitcoin puts them out of business. But they're all going to start accepting Bitcoin, and then they'll just be on board with it.
All right.
When JP Morgan starts accepting Bitcoin, you know that's the top.
Bank America, you see that hardly a bearish chart, filled the earnings gap, found support at 26.
These are the top 10 components. There's not one bearish one yet.
Nope. Wells Fargo. I mean, hit 59.99. It's sold off a few times. Tried to rally. I mean, that one's farther off its all-time high.
It's itching too, though. It's formed some support there. A little cup and handle from the last couple of weeks there forming. Gets up above 55. It's off to the races too. We are set up for the full-on, not just the Santa Claus rally, the full-on December rally. We are set up for it. I don't see why I'm going to come in here shorting stocks. They haven't given me any reason whatsoever. And every time we pull back 0.5%, everybody scrambles to buy them. Money managers are underinvested. I don't see where, unless we get some type of, major, catalyst, maybe, from the negative side, maybe coming from North Korea or something. And the last few, missile launches, they've shrugged those off too. I don't see what's going to bring us down. So I guess you just keep riding the trend. I hate getting bullish up here because, and we've been bullish but how do you get bearish? I love down markets. I love trading down markets. I wish we'd have the VIX back up at 20. 25, but it's not what I'm seeing in the charts. Not at all.
Nope, no, not at all. We can't find a bearish chart, Dennis, except for some of
the top 10 components, which make up how much of the index?
23%, 22,
23% of the S&P. All 10 of them look good. Yeah, it's hard to be short. Well, and then you go to the biggest monster of them all, Joel, Square. We know which they're going to add this to the Dow or something. Like, holy cow, this SQ. Now obviously we've been on this one. I've patted myself on the back a few times on this one, which we don't do that often. But SQ is just an absolute monster. This is in full rocket ship mode here now. I mean, the only thing that's going to stop this is Andrew left.
I don't know what's got into it. Up another $1.49 here, 49.55.
They liked it on Fast Money last night.
Oh, they liked it.
That's why it's going to have, because they liked it on Fast Money. This is the whole definition of bull market. They literally started talking about it on Fast Money. It rallied. It went from 48.5 to 49.5, and it was trading up at 48.5 because they said they were going to talk about it on Fast Money. Can you believe those guys have that much influence on Fast Money now? That is the definition of a bull market. When you've got people coming in, just giving commentary on a TV show, and it's driving prices up 3%. Props. We're friends with a lot of those guys. On Fast Money, a lot of them come on our show. Those are great guys. But it'd be like me. Just saying, okay, I like the chart, and it goes up 3%. I mean, it's more influential than analysts. These guys are influential, so props to them. This Fast Money, they even talk about it all the time and tweet about it, because they'll mention a stock now and it'll move 2% because they mentioned it. And I see the Fast Money Twitter handle tweeting about it. Oh, it's up 2% now, up 3%. They're like trying to drive the stocks. Like they think it's cool, and it is cool. I mean, they give an opinion on it and it flies. This is a full-on like bull market, man. Retail even driving this, because that's all retail traders last night watching Fast Money and then buying it after hours. So not only getting driven by institutions right now, you even got retail driving this market.
Retail. Wayfair, I mentioned here in the chat, this is an Andrew left short, 84 to 55, getting a little bit of a bounce here. But still, if you look at the longer trend, I mean, it's still an uptrend here. And I don't know how long left has been touting the short in this one. Looks like 75 basis the monthlies is major resistance, but still, I mean, just a bullish chart even in the what is this, a furniture online retailer?
Yeah, and you know what? I actually need a carpet for my basement, and I was looking. I had my wife looking at Wayfair. Stuff's expensive, man. Those carpets. You try to get like an 8x10 or whatever they are carpet. You spend like $400 or $500 in a hurry on a chunk of carpet. So I don't know. I was looking at there. We were thinking about buying something on Wayfair, and everything too much money.
Yeah, well. Dennis, I don't know what kind of carpet you're looking at there, but
look at them. You can't find anything. I just wanted some junky carpet. It's for my kids' playroom.
Go to Walmart.
I didn't even need anything like just to throw on some on the hardwood floors. I just wanted some carpet. I look at the Walmart ones too. They're even expensive over there. You can't get a nice little 8x10 carpet for under like $200. It's this world coming to, but we don't have inflation.
Overstock.com. Did you look to try and get a rug on there?
Do they sell them on Overstock? I thought they just sold Bitcoins on Overstock.com. That was a joke, by the way.
That stock, look at that, hit a new all-time high yesterday at 60.80. Another great looking chart. All you need to do is mention Bitcoin, and let's talk about our Bitcoin stock from yesterday. Riot hit 1289 yesterday. And boy, oh boy, this thing is still showing.
I wanted to buy it at the open too, and I forgot about it. And it opened at the lows. You would have taken no heat. It opened right down like 10:30. Low was like 10:25, and it rallied $2. And I was looking at it. I was like, "Are you kidding me?" I actually wrote it down on my sheet after we talked about it. I was like, it was trading up at 11, and I was like, I should buy that on the open. And then I just forgot about it. You start doing other things. I never got back to it. And then I look, and I was like, "Holy cow!" And I looked where it opened. I was like, throwing up. Because that would have taken no heat. If you bought that on the open at 10:30, you literally could have made 20% in like 20 minutes.
And the volume really picked up.
I can't feel. Look, we had somebody in the chat that wrote it up from 10:35 to 12. Sweet, that should have been me too. I can't feel my Facebook as a user in the chat that wrote it up. Nice job.
All right, I love to see that in the volume.
Oh yeah, that's what it's all about.
Yeah, that's why we do the show for y'all. 1035 open, Dennis open flat, 1020, and then went up to 1289, 1126. But doing a little research in that company. And
Chili Trader said same here. They wrote it up too. Everybody in the chat, because we talked about it on the show, and I forgot about it. You got to remind me, chat. You got to remind me.
All right.
I forget about these things we talk about on the show.
And we got to give hats off to David B here. When he was talking about Signet Jewelers, right? And somehow I found support at 61 and 60, and it took it out. Dennis, you made a good point. You didn't want to short it at 61, that you would short it at 59. Boom. Goes down and fills the gap there. And another chart that I was looking at, a perfect gap fill. I mean, even for just a short-term trade, Beamer came down all the way off the earnings, came down, filled the gap.
We like this one.
Yeah.
We had this one. We were talking 147, 148. We liked it, and it's up a couple bucks from there. IBM, Joel's talking.
Yep, even for a short-term trade. I mean, it just, if you're buying it here, 146, 147, it's kind of like a reset. Like, whoa, they had these great earnings. We go up 3 more days. Kaplooey, Warren selling in this area. You come down, it's a reset. You get a chance like to buy it before the good earnings report, and it bounced off 146. Now trying to clear 152. What do we have going here in the pre-market trading? Just hanging there, a little bump to 152.45, but it looks like above 152, got another leg up here in IBM.
Unbelievable. Just going back to, what was the chart right before that? I wanted to comment on it. Oh, the Signet. That was unbelievable. So, you have a stock that opens, and we thought 60 might hold, and we said if 60 goes, it starts trading 59, I think it could see 55. I didn't think I was going to see it in like 10 minutes after it started trading 59. I mean, this market is all about momentum. What is loved, it seems like forever. What is hated, it seems like is hated forever. We know retail, and, people were talking about the retail stocks. I noticed them a couple days ago. Even last night on Fast Money, they were saying, oh, these retailers are turning. Retailers turned 2 weeks ago, guys. They didn't, they're turning down now if they're turning anything. Like we've been talking about these retailers for a while bottoming out. I mean, Al Brands bottomed a month and a half ago. Kohl's was, bottoming off its earnings report, which was 2.5 weeks ago. Nordstrom bottomed 2 weeks ago. Macy's bottomed 2 weeks ago off its earnings report. If anything, these things have rallied too much, too fast now. So, where people are starting to get bullish, the retailers now you're late to the party. And we said this yesterday on the show too, and retailers did not have a good day yesterday. So Signet Jewelers is one, when you loved, it was loved for a little bit, but they came out and lowered guidance and people decided, no, we hate them. So that was an unbelievable move to open at 61 and then fall another $9 intraday. Lost over 20 points yesterday. That was incredible.
All right, 818 here. S&P's up 3 points, 99.25, just hanging up there near that all-time high from yesterday. So we'll see if we could close in the 2600 handle. Crude 58.05. That's a high. The other high when you came up here was 57.88.
Just told David Joel's buying you lunch.
Yeah, if he makes a drive up here, I'll buy him.
Come up to the Motor City. Joel's buying you lunch because he said yesterday for trade 55. Come up to the Motor City, we get you lunch. So we'll get David B into the Motor City.
Maybe come in for the parade tomorrow.
Is there a parade downtown?
There is a parade where it goes right past our office.
Nice, you can see that, right? So you guys can all work tomorrow and then watch the parade from the office.
I'll be here. I don't know if Joel is, but I will be here at like.
You're working more too, Spencer. You are a workhorse.
I didn't say that. I said I'll be here at like 8:39, but it's because we're having like a parade watch party. But I'll be able to do a show at 8:30 if you really really want it. But I don't think anyone's gonna want it. But 8:19. Should we get to earnings? Because
yeah, I know we have
actually some news.
Where do you want to go, Spencer? Lead the way.
All right. Well, let's start with Deere, I guess, because that's the big one. So Q4 EPS of $1.57 is a 10-cent beat, and sales of about $8 billion versus a $6.99 billion estimate. So they beat by essentially $1 billion for Q4, and then their fiscal year net income coming in at $2.6 billion is what they project for the year. So a huge quarter.
If you were buying it on their disappointing quarter last quarter when it got down on that day, capitulation day, down to 112.87, and you're buying anywhere around 115 when it made the hard bottom for a month, you're happy today. It's up at 146 and you're up 30 points on your $115 investment. So BTFD works again on Deer. Joel, thoughts as we are now up at 146 and a quarter. The Deer, nobody's caught in the headlights here.
Pre-market high 146.85, and you've only backed off a little bit. So this is one where you just want to keep an eye on that pre-market high and see if you can get some continuation through it. I mean, we've come this far. I mean, 150. I mean, I'm just throwing a number out there to you, but why not? Anything above 146.85. Some decent stock is traded here too. 236,000 shares. So I don't even know if it could be held down on the open. And so keep an eye on that pre-market high 146.85.
Salesforce.com reported last night, and this one fits the bill of a stock that has been running forever. I mean, look at this trend and look at this chart. It's been straight up, straight up. It also fits the bill of a stock that they love to buy on pullbacks here. So I don't think this is going to be one that's going to fall out of bed. Give us the details on CRM, Spencer.
Q3 adjusted EPS of 39 cents, which is a 2-cent beat. Sales of 2.68 versus $2.65 billion. So a slight beat on the Q3 sales number as well. Their Q4 guidance coming in just below the estimate by a penny. Sales guidance coming in just higher than the estimate by, barely. And the fiscal year EPS and sales guidance coming in pretty much in line as well. So inline guidance pretty much across the board.
Not a great quarter. It's been running up, so it's not surprising it's pulling back a bit here. It's also not surprising that it's finding people to buy the dip because people love Salesforce.com, and I don't think it's going to be down for long.
What are we doing? We're trading down $1.12 here.
What was the low?
The low, boy, oh boy, this thing was all over the map here. You did get under 106,
up, it was down,
105.
Yo-yo chart.
Yeah, 105.79. But what I would keep an eye on this one is the pair of highs you have in Salesforce.com. Two highs, 109, 109.19. Your all-time closing high yesterday at 108.80. So we're a buck 20 off the close. And if you want to try and, think, okay, this is a bad report here, the stock is going to turn, then lean on the 109. But if you take out that 109.19, you're just, sailing the new all-time highs. So not a lot bearish to say here. Yesterday, or the 2-day low, 107 even, and your 3-day low, 106.73. So call 107, 109 trading range in CRM.
Jump over here to Hewlett Packard, and we could go to either one. Let's go to HPE first. Meg Whitman. Meg Whitman's leaving us.
Yep, she's leaving us. They reported Q4 adjusted EPS of 31 cents, which is a 3-cent beat, and sales of 7.8 for $7.75 billion. So slight beats there on the EPS and the sales for Q4. Q1 guidance coming in just below the estimate. Well, a few cents below. 28 cents was the estimate, and 20 to 24 cents is what they see for next quarter or the current quarter.
And then give us the HPQ numbers too, because they both reported. And obviously, these two companies used to be together, but they split them up.
Right.
Give us the HPQ numbers as well.
44 cents in line with the estimate, 13.9 versus $13.35 billion. Fiscal year EPS coming in line. $1.79 is the estimate, and then $1.75 to $1.85 is what they say their EPS will be for the year.
I love the 21 level in HPQ. And if you can get a shot at it there, I think you're going to find lots of buyers there in HPQ. And it's the one I like better of these two. It's going to be the 3D printing version. Obviously, that's the printing HPQ, the more of the legacy operations. But I think that's, they're eventually going to be the leader in 3D printing. And I think 3D printing is still going to be a good industry as it tries to figure it out. We've had annihilation in all the 3D printing stocks, and I think that's because HPQ is going to be the leader there, and I don't think they need anybody else. Like some people will say, maybe some of these other little ones might get acquired by an HPQ. I don't think so. HPQ's got the money, and I think they're eventually going to be the leader. I like it on the pullback to 21.
And that confirms with your pre-market low at 20.95. You can see your 21 low hit on 3 other occasions. 20.95 also was the low on October 13th. So there's your major support at 21. Takes that out. You got the gap filled down to 20.5. I'm not sure why you had that gap up there. I don't know if it was a ratings or what it was, but 21 looks like a good level for support. Resistance here, kind of spotty, I guess, on a day where you have earnings. Wow, the whole time the close was up at 22.46. Wow, this had a really tight range yesterday, Dennis. Only had a 38-cent range. 22.30 to 22.68. So
it's thick, though. This is typically a thick stock.
Yeah.
So, like, if you look, a lot of times this thing has a 10 or 15-cent range. It's a thick one. Wow. Widely traded, widely held, and it's a thick name.
Gap fill at 22.30, and that's not far below the close. And recent high of the move, 22.68.
Jump over here just to the last couple earning stocks. GME, GameStop there, getting a little bit of a lift here. This is not a stock I want to own, though, just because we've been dogging this one. I had this one right since $30. I mean, I just think, there's so much stuff, online and your apps and everything now. I don't know why you got to go to the physical store and buy these, video games. I think this is, in my opinion, this is just something that is in trouble.
Well, I'll read you the number. I'll read you the number. I think
even though it's popping $1 today, I think long term this thing's lower.
I think they're going to have to just change what they do a little bit. But anyway, where's the number? Q3 adjusted EPS 48 cents versus a 43-cent estimate. Sales of 1.99 versus 1.96 billion dollars. So beat on both the EPS and the sales for Q3. They also reaffirmed their fiscal year EPS guidance.
Spinner saying this hit 20 last night. Did it hit $20?
I got a 1946. Right?
1946?
Yeah. Yep.
Man, I should have been out there shorting that. That's ridiculous. So stock the perennial dog and you give it that much of a lift, he gets back all of his loss from a month and a half. That didn't last long. Congratulations, whoever was shorting that last night. Good job. You're already up 15%.
Yeah.
This is something that's given back 2/3 of its gains already. This could go red on the day. Not even joking. This could end up being red.
All right, 1673, closed near the high of the session. Still holding in there. Gap filled needs to get down to 1679. A lot of support if they really start to whack it. See what happens at $16. You had 1, 2, 3, 4, 5, 6, 7 lows within a 20-cent range. And also the low of the move at 1585. So major support at 16, gap fill at 1679. I don't know, just trading up here, hanging up here in the pre-market at 1763. So don't like the fact that it's already $2 off its high.
The other one getting killed this morning is GES, GES. And retailers had their run here for the last couple of weeks. The last couple of days has not been nice to retailers. So GES reported a couple of days too late. They probably would have reported last week, maybe it'd been okay, but not good enough. Well, I don't even know what the results were. GES is down 11%, so I'm assuming it's not good enough.
12 cents is in line with the estimate, and then sales of 554 versus $569 million. So they missed it by $15 million on the sales for Q3. The Q4 EPS guidance is more or less in line. They see sales growth for the year up 10 to 12%. Fiscal year guidance.
Well, that's good.
Yeah, that's good. Fiscal year guidance coming in line as well. Q3 comps. For the U.S., down 10%. For Europe, we're up 10%. And for Asia, we're up 3%.
Oh, up 10%.
Yes. Down 10 in the U.S., up 10 in Europe, up 3 in Asia for Q3.
I better start focusing on Europe. Why does Europe love this company so much?
I couldn't tell.
That's the question.
I don't live there. Either. I don't live there. I don't know. So I couldn't.
$15 where I was looking at it last night. I think you got some support down here. The stock had been running. I think who's ever short might bring it in. That's the the good news. The bad news is this is a retailer that just is in a business that is struggling.
You got down to 14.57. You had a low on a gap update. Maybe that was back in August, so probably its last earnings report. So 14.20 is below that pre-market low of 14.57. Dennis mentioned a series of lows here just above the $15 area, 80 cents away from that. So we'll keep an eye on those couple levels. Basis the 15-minute chart here. Just seller at 16 to 16.20. So that's your short-term resistance support in the lower 15s.
Jump over to a few stocks we're getting from the chat. One in the YouTube chat. Yeah, we have another chat as well. HIBB, Hebet Sports. This thing popped big time there. We know our friend, the Reverend, is in HIBB, and he was pretty happy on the pop from earnings a few days ago here. What are your thoughts here? We've had 3 days of consolidations, pretty wild ranges still. I mean, you're talking about $1.50 range on a $17 stock. Yes, it's like a 9% range yesterday. This thing's still pretty wild, Joel. HIBB.
Yeah, and someone, an analyst come out yesterday and said that the rally won't last or something like that. Maybe that's what hit it yesterday. Big move, and it's just digested that move. I don't know. I mean, can it clear $20? We talk about another gap fill here, and you did have that in Hibbert gap down back in August, probably off an earnings report. 1963, you needed that to fill the gap. You did that in a little. Oh, no, you just missed it by 8 cents here. 1955, that was your high of the move. So got to get back over 20. I'd say get back over 20. You got another move to the upside. Would not like to see it below 1650. Man, this is still holding in here. I mean, I don't see any really reason to get super bearish. It still starts to get into that gap area.
Jump over here, just other stocks that we're talking about. Actually, I'm going to go to one that I was looking at here, and we haven't talked about this one for a while. And we'll see here, VERI. This is one, that we haven't talked about. This got citroned up when it was $70. And we know it had the run from 20 up to 70. And, has now come all the way back down to where it was. And there's a potential for a double bottom here. I'm just looking at the 21 from November the 13th and then the 2109. And this is really where it started from Barron's as well. I mean, there's a lot of memory around this $20 level.
Man, Dennis at Barron's, man, it was like $7.50, $8.
Oh, it was around $8 when Barron's article came out. Okay.
And then it doubled.
What are your thoughts here around this 20?
Let's see. The lower,
technically speaking.
I mean, a lower risk buy here. I mean, you had a couple daily.
If it takes out 20, I would say give it yourself. Yeah, go ahead. Sorry.
No, a couple lows just above 21. 2068 was a low on September 11th, and it had a big day on that day. So starting to accumulate your support here at 20. And I don't know. I just don't know what you're going to need a catalyst here. I'm not sure when they released earnings. If in fact you lose that $20 area, you don't have a whole lot to lean on until 1750. But series of lows in the same area, just like that pop up to 30 was sold pretty hard. But yeah, I agree with you here on this one. I like to support at 20.
There was some analyst commentary here overnight. No ratings changes here, but Craig Hallam, who covers the stock, and I'll just read you what they wrote. They said that Veritone may be close to completing an acquisition or two that could add meaningfully to its revenue profile based on the timing of its share offering. So it had an offering last week of 975,000 shares at $23. So they think they're raising money to maybe do a little bit of M&A. That's what Craig Hallam thinks. And they think that could, help out the stock here too. So interesting, they might be doing a little bit of M&A action. This is an AR play. So augmented reality, it's one of the pure plays. It's obviously doesn't, and buy up on the chat saying that doesn't make any money. This is a very speculative stock, but it's a stock that caught wind, earlier from that Barron's article back in August and just, went from $10 up to over $70, where we know what happened on the $70 day. Citron came out and said, they saw the stock going a lot lower, and obviously it did since then. So props again to Andrew Left. The bubble buster comes through again to bring the stock back to earth. He's the only thing that can bring down stocks is Andrew Left, by the way. But I don't know. We're back here at $20. It's interesting to me. Somebody else in the chat, I can't feel my Facebook is talking ACTG. They own a lot of Veritone. I actually have a position in ACTG as well. I think it's like a more conservative way to play it because they have a huge position in VERI, and they've also got some other stuff as well, and they're not, bleeding the cash maybe that the VERI is. So, that's the way I've been playing it. I'm long the ACTG. I bought it right around this price, around 420, and it's just kind of gone nowhere here. But the Veritone's actually come down, and ACTG is still holding on. But I'm almost interested in just maybe the straight up play of VERI, just for, I don't know, speculative, very speculative. And, if it takes out 20, I think I would be out. But just as a trade, maybe you could buy here in the 21 handle, risk yourself $1. It takes out 20, you say you're wrong. And maybe you can get back up to that 30 again.
Let's see when we got earnings.
I don't want to get caught with this though. So at 320, I'm out.
Let's see here. Don't have another earnings report until February 17th, and they didn't do too good off their last report. But, if they're making acquisitions, never know. Might do a little bit. But nice looking chart here, at least forming support at 20 in VERI. All right, Spencer, we got an 835 guest today.
We do. Dave Winky. This is a guy that you know, Rachel. He's the editor of Keystone Charts.
Yep.
All right. Well, we'll be right back with Dave Winky. He's going to share with us some of his technical analysis and how he goes about that in a moment.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel, and we have Dave Winky on the line. He's the editor at Keystone Charts, daily market technical analysis for traders and investment professionals. Dave, how you doing on this Wednesday morning?
I'm doing great. How you guys doing?
We're doing good. So we always get different people, different guests on the show, and our chat seems to really like people that have some floor background. And you certainly have that. We had a good conversation. So just talk about your little time on the floor. And then I asked you for like a good story, like someone making a lot of money, and then also a bad story. So give us a little bit of your floor background.
All right. I started in 1985 on the floor on the Chicago Board of Trade with Kidder Peabody. So that obviously dates me. I started on the bond arbitrage desk and was just basically a counter, was a temporary employee there. Worked my way up a little bit, managed the MMI desk during and after the crash in '87, moved over to the S&P desk and managed that desk shortly after the crash. So I've been with a few different firms on the floor. My longest tenure was with Kidder and then with Car Futures. I built their equity quadrant up for them, hired the brokers and a team of 8 people to work on the floor, and we had a pretty good desk on the floor. And Joel, I somewhat just looking at your picture, remember you a little bit. I used to. I had my desk moved around a little bit in the S&Ps, but obviously one of the things that you did back then was you used various brokers, and
right.
You had eventually they had phone connections into the other guys on the other side, so you could use somebody on the other side of the pit. I really miss those days.
All right, give us a story. I mean, going back, we had Greg Bruno who was on during the flash crash. Is there any particular trader, without naming the name, or particular story that sticks out to you?
Well, yes. Obviously, anybody that's been on the floor for as long as I have has many, many stories to tell. there were, when I was on the MMI desk, right after the day after the crash, if you recall, the MMI was the old blue chip. So it was the top 20 futures. And we saw a lot of buyers out of people. And we saw on that day, we saw guys coming in from the grains into the pit, you know. And these guys could throw around some size, and it was kind of amazing. I mean, a big trader back in the MMI would do 100 lot, you know, and these guys are coming in bidding on 1,000 and stuff. It was pretty unbelievable. But the MMI actually rallied sharply and kind of dragged up the S&P and helped it. But there were later on in my career, I left the broking side and went into the pit. And I was amazed that people just wouldn't trade with me, you know, and I've been down there for 20 something years and on the floor, and I was a broker, a pit broker, as well as I ran the desk. But once you get in the pit and you're a local, people just kind of waiting you out. And I was in the NASDAQ pit at the time, and it was just so brutal. The only time I would ever get hit on a bid is if somebody had, you know, a few hundred to sell and it was going much lower. And it was difficult to trade when nobody was willing to take you out of stuff. So there were guys that would trade a lot of volume without ever putting their hands up. And that was kind of one of the things that clients would have as a, you know, everybody had this, the locals are cheating me type thing, you know, and then you get on the screens and you have different stories with people finding, you know, with the algos and the high frequency guys and stuff like that. So there's always a way for people to kind of step in front and take advantage of, you know, quick little immediate trading situations. But I'm trying to think of a story that I had a client that was trading back month Nikkei at the time, and I put an order to sell 100 back month Nikkei. And what the trade reporters used to do is, if the back month there wasn't a whole lot, they would just keep up with whatever the spread was. They would just make prints without actually trades going through. And I explained that to the client that it traded a tick through your level, but you didn't get anything because nothing traded. If you want, I can ask the CME to take that print out, and nothing was done. And the guy was like, don't worry about it. I understand. And by the end of the day, the market had moved so much that he wanted his fill, and it was a $75,000 error my way. And I remember having the conversation with him that, you know, it wasn't fungible, so you couldn't do anything in Singapore. You were at risk for the next day anyway. So I literally stayed there overnight watching the market. And I told him before that evening that if that market comes all the way back and I get a better fill, the CME allows you to give an as of, and I can give you that price. And the next morning, of course, the market turned around, and it was considerably and the client wanted me to give him the actual fill that I was getting that day. So it was one of those situations where you take a lot of risk as a broker, and you almost never get the winning side of those trades, if you know what I mean.
All right, let's move to your service and technical levels and equity rates, currency in commodities. Talk to us about your service a little bit and tell us what's on your radar right now.
Okay. My service is, I've been doing this for 20 something years. When I was working for Kidder and then Carr, I was building out what's called the direct to floor operations, where they were allowing big institutional clients to talk directly to the pit. I was running that operation, and one of the features that you have, I mean, it was the commodity, right? I mean, you had space, you had a good booth location, you had, you know, there were things that you could sell. But one of the things that I was using was technical analysis. So I was self-taught. I was talking to several of the locals that did technical analysis, and kind of learned a little bit from them and from some of my clients. I covered some of the largest CTAs and hedge funds in the world and pension funds. And what they wanted was they wanted to see charts that they could understand in 5 seconds. You know, these are busy guys. They didn't want to have me explain to them what I was looking at. So over the years, I've kind of put together this global macro type newsletter that I was putting out to clients for many, many years. And I recently decided to launch it as a newsletter product. It covers everything from equities, rates, asset allocation, tactical allocation, currencies, commodities, energy, metals. And I just give a quick synopsis of where the key levels are, what we're seeing. And one of the things that is really, I think is important that a lot of people may not do is I look at the relative value trades, and it's been a little more difficult in futures. In the ETFs, you can always do, you know, XOP versus XLF, for example, you know, or you can do QQQ versus SPY. But in the futures, the contract sizes are different. But using CQG charting services, they give you a really easy, good way to just use the notional value of futures, pair one up against the other. It tells you what your ratio is, and I use that, and that's been something that has kind of separated me with my clients from other brokers as far as giving a quick view of, you know, somebody might say, boy, I really like gold here. I think it's ready to break out and move considerably higher. And then you show them the charts of gold versus copper, and gold versus E-mini, and gold versus crude oil, gold versus 10-year, and you say, maybe I don't like it so much. It's just another way to kind of give you a view where does the money flow going, how does the chart look on its own, and then how does it look relative to other asset classes. And I do that in every day in the newsletter. I do the fixed incomes, the 5s, 10s, the 30s, the yields, and the curve, of course. And just I think that just it's a way to really kind of keep you on the right side of the market.
So talk about what you're seeing now in the markets as far as sector rotation, some relative strength, some relative weakness.
Yeah, you know, one of the things I heard you guys talking this morning, you know, rotation has been something that it's been a stock pickers or a sector pickers market this year, right? I mean, and rotation really hasn't been a negative for the market. We were talking about, I heard you guys talking about there's nothing really to short, or it's almost as if people get fired for being short the markets, you know? It's just not looked at. You know, but you can short individual sectors, and you can short, you know, in futures, you can short Russell versus S&P. You can short S&P versus NASDAQ. And in the ETFs, you can be long XOP relative to XLE, for example. One of the things you guys were talking about were the energy names. You know, XOP, the explorers and the drillers have really outperformed XLE since the September lows, right? XOP's outpaced by over 14% XLE. And some of those names would be like, MRO, for example, has rallied 57% from its August low, right? Whiting Petroleum, WLL, 77% at its high, November high. It's pulled back since then. Oasis Petroleum, OAS, up 70%. CLR, Continental Resources, up 63% from the July low. So you've had earlier in the year when crude oil was rallying and trying to lift, a lot of these names in XOP were dogs, and they just kept going lower. Even with, you know, crude oil would be up, you know, 1-2% in a day, and you'd see these names still off. And since August, September, you've seen a lot of the XOP, the driller names have actually been keeping pace or outpacing some of the names. And I think that's been a benefit for crude oil overall, where you have the underlying crude oil firming, and it's not being weighed down by the drillers. XOP versus XLE, for example, retraced, has been down all year, right? XOP underperformed since the beginning of the year, but it retraced a 618 retracement up to a 618 retracement where XOP outperformed. And then it kind of fell back to the 382 retracement. So I look at a lot of those type of things and see where the rotation might be. If crude oil is going to fail, will those names, are they weighing, or are they more resilient with the yield curve flattening considerably, which, obviously that makes sense, right? The Fed's raising rates and raising them gradually, and you've got the short end, of course, is where the rates are more vulnerable or will move. And so as the yield curve has flattened, banks should be more vulnerable, right? And at times they have, but they've really kind of been resilient with the overall market tone. But we haven't seen rotation into banks in the last month. We have seen rotation into tech, where NASDAQ has been outperforming S&P. We've seen rotation into energy, a little bit of out of financials, recently into XRT and the retail names, whether that's going into the holiday season or whether they were just, laggards for so long that you had unwinds. And what I like to do is I like to take a technical look at the sectors, how they look relative to other sectors and how they look relative to the overall market, and kind of see where, if we're going to get a move higher here, is it going to be led by unwind in small caps? Is it going to be tech continuing higher? Is it in those type of trades, which kind of give you a good, if you're trying to generate alpha and S&Ps are, kind of stuck a little bit, for example, in a day, but you've got maybe more alpha generation out of the Russell 2000. And when the Russell last week hit a key retracement level and bounced, it also hit a key level versus it hit the double bottom prior year low versus the NASDAQ, and it hit a decent retracement versus the S&P. So when those things line up and you get the old previous high back in July 26th in the Russell, and then that hits and that holds, then you look for Russell maybe to outpace, not necessarily having to buy Russell and sell S&P, for example, but just that's the spot where you want to kind of be long for the short duration.
We've been on the line with Dave. Dave, we're kind of up against the clock here. We got to do some imbalances. But we've been on the line with Dave Winky, editor at Keystone Charts, talking about relative strength in the markets, giving us a little bit of different perspective. Dave, thanks a lot for coming on, and we'll speak to you again soon. Okay.
Thanks for having me, guys. Have a great Thanksgiving.
All right, S&P futures backing off the high, still up $1 97.25. That pre-market high is coinciding with the high we had from yesterday. Dennis, 853. Any notable imbalances?
Yeah, I just want to talk VERI again one more time because Craig Hallam, who I was just reading their notes, just lowered their price target from $60 to $31. That's why VERI is actually taking up the support. So it looks like it's going to open up below 21. So I'm just, as I was saying, it looks interesting at 21. And all of a sudden, here it is 10 minutes later, new news. Doesn't look nearly as interesting to me now. It's trading at 20.5. And I think, with that price target lowering from 60 to 31, it's going to spook the market here. I think it could take out that 20 support. So I think I'm out on that VERI. I'm not going to do it.
Okay. All right.
Glad I didn't do it. Hopefully nobody else did it here. Well, it hasn't really traded hardly in the pre-market, so I don't think anybody did it because they didn't really trade. But it's going down here now. And yeah, Craig Hallam just lowered the price. So they kind of talked it up a little bit in a note, and then I just looked and they lowered the price target from 60 to 31. So that's interesting.
It's still 20 though. I mean, it's
still $30 again a price target, but when you lowered it from 60, it means you're not nearly as bullish as you once upon a time were. And if you're into speculative stocks trying to make money, it's
$10,
tricky
right,
there. So.
Right. I was gonna say, kind of wait for this thing. I mean, scene of the crime was $7-8. I don't know if we're gonna get back down to that level, but definitely had its run. Another thing you have is a lot of overhead supply in something like this, right? All the people that got caught in that magical run, they're praying for 30.
It takes out the 21, and that's a low from a few days ago, and starts going through 20. Then you start thinking teens on this. Yeah, so that is concerning. So, we talk about our losers. I have something to call I just made that I thought maybe this could hold. It doesn't appear to be going to hold here 10 minutes later. So,
all right. All right. Rob Hood's asking about OLN. He says he likes the charts on it. OLN. Let's take a look at that.
Olin Corp.
This is
This is a Rob Hood chart.
It is a total Rob Hood chart. Right.
Really? He finds these ones. These ones itching for the breakout.
Yeah.
Like it's gearing up to go. I like it too, Rob Hood.
All right, Rob Hood, Old Corp. I have no idea what they do, but we're trading. We're flat here, 37.15. Nice run up in it. You just got to be aware. You had a high yesterday at 37.22, 37.15 close. A couple other times it got above 37, but couldn't hold. 37.52. I see a high, 37.46. So a lot of highs into 37 handle. Rob Hood, one thing I kind of like about this, I mean, the value has been on and off, but on the down day, or really a flat day that you had on Monday, it only traded 700,000 shares, but you had a nice up day yesterday and you traded 1.5 million. So really, I mean, a clear breakout would be over its all-time high at 37.52, but it looks good. I mean, you like to see it hold the whole number too, like 37 off the open.
Tom McElroy from my Twitter feed is asking about SWN, Southwest Energy, and that stock is trading up a little bit here in the pre-market. It's had a pretty good run. We looked at a lot of the energy stocks that were sitting at the lows. This is one that is not sitting at the lows. This is one that has come up off those lows before. I mean, when you look at this and put it in perspective, this stock is ugly, though, because this was a $16 stock a year ago. It's now a $6 stock, but showing a little bit of life here. So, I think, jury's out. I think it's got to get above 650 to really get interesting here again. Right now, it's kind of a no man's land.
Just keep an eye on that seller that you have in SWN over the last two sessions. It's 638 right on the nose, and then your 3-day high 647, another high 647. So I think 650 would signal you're out of the water, or at least have a chance out of the woods, out of the water. I'm thinking about swimming. I'm thinking about swimming tomorrow morning. But
Joel's all about the swimming. He goes out of the water as well.
Major support at the $6 level. So we'll see if it gets down there today. Yesterday's low 607.
There are some big imbalances here, and we got to give these because I'm seeing huge ones across the board. Square.
$1 million to buy.
47,000 to buy now. Like, this thing's going to challenge 50 today. And it's in full rock mode. I was just saying and jokingly, I think the only thing that can stop this is Andrew Leff from Citron. If he comes in and tweets, Square's worth $40 or $35, the thing will fall. But these are the kind of charts you got to watch out for Leff on, because he likes to short the rocket ships and he likes to be the bubble buster. And he usually gets a top because he's so influential. But I mean, really, this stock is just an absolute monster. I heard it was funny on Mad Money last night. They talked about it on Fast Money, and then they talked about it on Mad Money too. I mean, CNBC is just pumping the stock. And in the background, they left the editor's mic on the Mad Money show, and whoever it was, she says, "Stock's unstoppable." in the background. And Kramer's like, "Is your mic on?" As he was trying to make a piece, and they were talking about Square in the background. So everybody's watching this right now. 688,000 shares have already traded. $50, probably going to be some size up there. But we know how this just chews through size anyway, so I don't know if that can stop it either. But that would be my next pricing point. I think that's where it could maybe have an initial pause, but I don't know if anything can stop this stock besides Andrew Leff.
All right. Any other?
Yeah, there's a ton of them. So AT&T, 158,000 to sell. We know AT&T is struggling, obviously, with the whole Time Warner deal. Stock has been coming off a little bit. Pfizer, 106,000 to sell. And Pfizer just sets up here kind of an interesting chart. I'll give you all the imbalances, and you can pick your poison on which charts you want to look at. Alibaba, 132,000 to buy. So our guy's still there. Look at General Electric, buy imbalance today in GE. 181,000 shares to buy in General Electric. Hewlett Packard, HPQ, I was talking about liking the 21 level. We are there right now at $21. 158,000 to sell in Hewlett Packard off their disappointing earnings report. Nike, 82,000 to sell. Pepsi, 39,000 to sell. Procter Gamble, 33,000 to sell. Some sell imbalances, guys. Verizon, 55,000 to sell. Snap going the other way. SNAP is 65,000 to buy. What charts do you like there? I just gave you 10 stocks.
Oh man, I mean, they all look pretty good.
Ones.
Yeah, they all look pretty good, but DC1 is just hopping in here. We'll make this our final stock of the day. SHPG, Let's take a look at that. Is that a shipping? Is that a shipping
Who's
stock? Shire.
No. That's Shire. That's drugs.
Oh boy. Let's see if there's any kind of pre-market action going on in Shire.
There is. It's up $5. And Shire sell-off on Roche data is overdone, said BTIG today. So Roche came out with this data on their one drug, and they hit a lot. They hit Merck on it. They had a whole bunch of drugs on that. I think that was yesterday or the day before. Looks like BTIG coming out here today and defending Shire. Shire has also got other news here too, Spencer. And if you want to jump in here anytime, you can as well. I was just looking at too. Thomas Dietrich going to be the new CFO. So it looks like they're getting a new CFO. They're doing some stuff over there at Shire.
Yeah, I'm ADR, so you're not trading the primary market here. Getting a pop at pre-market just under 150, 149.63 is your pre-market high. You got to keep an eye on that 150 level. You hit that 3 days ago, hit 150.44, came back down, and then you also hit 150.27. Couple highs, gets up and holds 150. I think you got some continued upside there. 150 is acting as resistance now. All right, Spencer, we got a special edition Friday show coming up. You want to tell folks what's going to be going on?
Yeah. So we're off tomorrow, and Friday we decided to have some fun, and we invited Sean Udall on for the entirety of the show. So Sean will join us at 8 a.m., and will be with us as long as he wants, pretty much, for the full hour, if he's up to it, if he can take us for all that long, for that entire time. So looking forward to that on Friday's show. Joel, Dennis, and Sean breaking things down together, and I'll be here in the background. But we won't be here tomorrow, obviously, holiday, and hope everyone has a good one. Lots to be thankful for this year. Thankful for this bull market. Thankful to all of our listeners who listen to us every day and who chat at premarket.benzinga.com or on YouTube. Thankful to all of our guests, like Dave Winky today. Appreciate that, and hope everyone has a good rest of your day. Hope you all have a very happy Thanksgiving, and hope we see you again on Friday.